My name is Jim Johnson. I'm with the Small Business Development Center, and I appreciate and thank everybody for coming on to the webinar about a very interesting topic and a topic that's near and dear to my heart, which is rural entrepreneurship. I'm actually from Orangeburg, and I worked in Orangeburg for many years, ran businesses there, and worked throughout those counties surrounding Orangeburg, which are all rural. So I have a heart for rural small businesses and love working with those folks to try to be more successful. The SBDC, if you've not heard of the SBDC before, Small Business Development Centers, it is an SBA resource partner, and we're hosted by a consortium of universities in South Carolina, which include the University of South Carolina, which is where I'm located, my office, and also Winthrop, Clemson, and South Carolina State Universities. So between all of those universities, we host 21 locations. So you can pretty much find an SBDC anywhere in the state, wherever you are. And I think each one of us touches some rural county or rural small business. We also have with us today Jessica Shaw with Madsen Consulting. And the SBDC is in a collaboration with Madsen Consulting and the South Carolina Department of Agriculture and Clemson Extension on a center called the Center for Cooperative and Enterprise Development. And so we basically work throughout South Carolina, especially in rural areas and with rural type businesses, on developing cooperatives and enterprises. So it's a great partnership amongst folks to once again serve the area in the rural areas of South Carolina. So we'll go ahead and get started here. The next slide is thought it's always good to have some interesting, fun tidbits to start a program. So we have some information on top 10 rural trends. As a small business, if you're already in business, it's still good to know what the trends are in rural areas. And also, what are the challenges, which there are many, which if you're in the rural area, you pretty much will be aware of most of these challenges. Jessica will speak more on business planning and grants. Grants are always of interest to everyone, but there's more to grants than you might consider. So Jessica is going to speak a little more to that. And then I will talk for the remainder on microloans, funding of small businesses in rural areas. Again, this is a slide just, outlining who I am, kind of my experience in small business, a lot in medical background, restaurants, property management. Also, I've been an instructor for many years for both Claflin University and South Carolina State University. So I have some other specialties, but you can see rural small business is a specialty because it is really a specialty. It's because things are done differently in rural areas. But I enjoyed it. It's definitely nice working in the rural areas. So top 10 rural business trends in 2023. Some of these may come as a surprise. Some of them may not be very much of a surprise to you. But bed and breakfast is a rural trend. And when you start to think about Airbnb and VRBO and some of these other platforms that can be utilized in really the property management type of business, it opens up avenues that rural individuals and business people never had before, really. Bed and breakfast is a traditional, conventional model. It's been around for a long time, along with your hotels and motels. And more and more folks, especially since COVID, have been interested in getting out of the city and staying in rural small towns, and love to find bed and breakfast, to do that with. So it's trending, still something of interest. Rural ride shares and really transportation in general is trending in rural areas. People like convenience. You have a lot of services that revolve around delivery that weren't in rural areas that are popping up more and more. So the ride shares being one of them, way to transport folks around. Being a local guide is kind of connected into tourism. Rural tourism is another, I guess, growing sector. Tourism in rural areas has generally been around natural resources, like your state parks and other natural resources that you can find in the country that you don't see in the city. But agritourism is growing, a lot more interest around that, and just there's other aspects of artisanship and things like that people go to rural places for. But creating a company, guiding folks around that, that's something that's popular now. Co-working space, building out, co-working spaces. Folks don't like. You could go in and rent a space in an old downtown in a rural area, and it could be very costly, and you might not even need it because these old buildings had like 5,000-6,000 square feet, whereas all you might need is just a little space. I have heard this model many times. Folks come in and say, "Hey, let me rent this space, renovate it, and then sublease sections of it to smaller businesses who can come in. They're not paying as high rent or utilities, but have a retail space and whatnot." So that's trending in rural areas too. Mobile gyms, fitness coaches. This is a general trend, across the United States, I think, not just in rural areas. But the fact that you can get a fitness coach to come to you. Some folks in rural areas don't have access to gyms and things like that. They have to go to the closest, bigger town to do that. So got kind of like a pop-up mobile gym or mobile gym that can come to the town, people can take advantage of. Interesting idea. Food trucks, pretty conventional, been around, but thing is that it's mobile, right? You can get to whatever market you want to get to. Computer services, tech supports, always popular. Hair salons can kind of be folded really into services, along with pet, handyman, tutoring. I know that's misspelled. Probably not a good word to misspell, right? Tutoring. But yeah, all of these services are needed. The education, access to education in rural areas is an issue. You'll see on the next slide. So tutoring services to help support, those deficiencies, it's a gap. And lastly, here we got small farms, composting. You're in a rural area. What are the assets? Land. So farming could possibly be an alternative. I am a specialist in agriculture. So if you were ever interested in that, I'd be glad to walk you through the ins and outs of starting farms or just the feasibility of it. I also have a link here. I believe y'all will get these slides at a later time, but there's a link to 59 more business ideas for rural areas. Plenty of ideas out there. So if you already have a business, you can also look at some of these models and see how you can adapt your existing business to a trending model. So you never know what you can come up with as a way to find more customers. So now let's talk about rural challenges, which there are many. So we have a chart here with some data outlining some of the top challenges, the top two being taxes and lack of customers. And the reason I think taxes is cited as a challenge, because rural counties don't have the tax base that urban counties have. And the way the tax system is set up in South Carolina, a lot of services and government services that we pay for are paid through local property taxes. So when you don't have much of a property base, you don't have a lot of businesses, which 2/3 of all property taxes are collected from commercial, small business, and industrial. Only about 1/3 is, from residential. So if you don't have a big industrial manufacturing base and you don't have a lot of businesses, then most of that is left for, the residents to pay for the roads, for the police, for the fire, for all the things the government needs to operate. So in that case, what it means is you have less people to spread the taxes across, so you have higher taxes. It's unfortunate, but it's the way it's set up, currently. The other thing is a lack of customers. And if you live in a small town or a very rural area, you open a retail shop, it's like you need X amount of customers per day just to pay for the light bill, right? And for the people who are working there. And if you can't get, a break even, you can't, make that threshold of the number of customers a day, it makes it hard to make money. So you really have to be strategic and consider the feasibility of opening a rural retail type establishment. Sometimes, they're great because there's no other options in the area. So people come from all around just to come to, whatever your store, your product or service is. But yeah, I mean, you need people. You have to make sales in the end. So if you don't have a lot of customers, it can be an issue. One way to overcome that is through e-commerce platforms and the internet and being able to sell and ship, right? So all those are good, positive steps towards helping rural businesses, but we're just not quite there yet because another challenge is internet, quality internet, right? Access to quality internet. If your internet goes up and in and out, it's hard to do business over the internet. But so that's something that comes along very slowly, but surely, hopefully. Um, and plenty of other challenges there to talk about. But you get the idea. The rural areas have challenges that aren't found in urban areas. So, and those have to be overcome by the business through various means, such as business models, good strategic plans on how to capitalize on markets outside of the rural location, and other items as well. So now we'll move to the business planning and grants, and Jessica Shaw with Matson Consulting will pick it up here. Let me stop sharing so that you can get on and share. Here we go.
Sounds good. Alrighty, y'all should be able to see that now, I think. So yeah, like Jim mentioned, I am Jessica Shaw. I'm with Matson Consulting. We're an agribusiness consulting firm that's based out of Aiken, South Carolina. So we work a lot with small and mid-sized farmers, usually in rural areas, and not just farmers, but ag-related businesses in general. So it could be food businesses, that sort of thing. So, but that's really kind of where our expertise is. But we work with a lot of folks on developing business plans, helping them find funding opportunities for their business, and also applying to those opportunities. So developing grant applications, filling out loan forms, that sort of thing. So today I'm just going to talk generally about business plans, kind of what goes into a business plan, and how they might be useful. And then I'll also cover grant programs. So just kind of figuring out if grants are right for you. And then I'll talk about a couple of popular programs. Again, most of them are going to be related on the ag side, but hopefully a lot of those resources can also translate over to just other rural businesses in general. So one thing I like to remind folks is that a business plan is a living document that should continue to grow and change with you as your business grows. So if you're just starting up, your business plan is going to look a lot different than it will hopefully in 5-10 years, but you want to keep changing it, keep developing it, because that is going to really help you just kind of keep track of what your goals are, how you intend to accomplish those goals, that sort of thing. So it's also a really great tool to help communicate where your business currently stands. And, because that could be communication back to a potential lender, a grant officer, whoever it might be, just, interested community member, that sort of thing. I know Jim's going to talk a little bit later about some of those things that those lenders look for. And so this is just a really great way to easily present that information to them. Here's a kind of a typical outline of what a business plan looks like, and the general sections that are included in there. So I'll just kind of run through these. The executive summary is kind of how it sounds. It's just usually a one-page summary of what your business looks like, your kind of business plan outline, who you are, what you're doing, and then usually a little discussion about where you stand financially. This is a great piece of it because, you know, if someone's in a hurry or a lender's just flipping through, it gives them something very easily to read and to look at, and to get a quick understanding about who you are. Then the business description is kind of how it sounds, but this is really where you're going to give an overview of the business, the history. Like again, if you're just starting up or if you've been doing this for 10 years, you can really outline that there. Also discuss the ownership of the business, your business structure, your mission, your goals. You really want to cover all of that in there. Products and services, that's going to be what are you providing? What are you selling? If you provide services instead of a product, what does that look like? Marketing and selling, how are you getting it to those people? So like Jim talked about, one of the challenges is reaching customers. So this is really where you have to explain how you're going to overcome that challenge. Are you using e-commerce? Is it social media marketing? Is it in-person marketing? Where are people going to buy your products from? How are they going to get those services from you? And then pricing is how much do you charge for it? How do you value what you're providing to folks? And how does that compare to what other people are doing? And then financing is really where you lay out your financial capacity of the business. So this will be talking about your expected sales, expenses, all of that. And it should also be forward looking. So what does that look like over the next couple of years? This would also be where you can outline your sources of funding. So if you're going to get a loan and you know that you will need to put some additional money up, where's that money coming from? If you're looking at grants, what grant programs could you potentially include in that? All of those pieces. And then the appendices is just kind of anything additional that you feel like needs to be supported with in the business plan. So that would be maybe some of your longer financial statements, resumes for key personnel or the owners. And then if there's anything, you know, that a lender or a grant program specifically requests that you include, you can also put it in there. And I did include a link to a business plan guide that we helped put together for the South Carolina Department of Ag, and that's listed on their website. And it really kind of spells out these sections a lot more and goes in depth about what you can include in there. And it also kind of gives you some tips about developing your financials and what to include in those pieces as well. And along that same line, I wanted to just kind of cover some other resources out there for helping you develop your business plan and, you know, put together those different components that go into it. So obviously the SBDC is a great resource for working through your business plan. SCORE I have on there. They are a network of volunteers who help, they provide mentorships, and they can help really work with you to develop your business strategy and help you kind of get some of that on paper too. I have ACRE listed there, which is the program I mentioned that we did that business plan guide for. They also provide a curriculum program that is 6 weeks, and it helps walk you through how to develop your business plan. And so at the end of that, you would actually have a business plan. Similarly, the New Beginning Farmer program there, that is specific to new farmers, but same concept there, where you go through a curriculum program to develop your business plan. And there's a lot more out there that are similar to that. And a lot of these resources are also free. So you don't, you know, you can go to a private consultant like we are, you know, we help work with folks to develop business plans, but it's not required. It's not necessary. It's something that you can work on yourself, but, you know, there are these free resources out there who can help you with that business plan development overall. Oh, and I also want to add that many of those resources also have online tools for you too. So, you know, I mentioned that one guide, but there are also different guides that will help you go through each of those pieces. So definitely check online for those tools. So just to cover real quick about grants. So Jim mentioned a lot of people are always interested in grants, and we definitely get a ton of calls from people that say, hey, I heard I can get some grant money. What does that look like? So the first step is really figuring out, are grants right for you? Should you even really consider them? Is it worth your time and all of that? So these are some of the questions that we generally like to ask when trying to figure that out. if you should go for grants. So it's first one is your chance of winning worth the effort? Is the amount of time that you have to put into developing the application, is it really worth whatever you're going to get out of it? Are you going to spend more time trying to figure out how to shoehorn your business into a grant program than you are actually doing your business? So that's something to consider. And so would you be more successful if you did something else? So instead of just trying to finagle all the paperwork for a grant program, would it be better to look at a loan instead for what you actually need? A lot of folks want equipment, big pieces of equipment, or they need trucks, things like that. And a lot of grant programs out there don't cover those pieces. So instead of, again, trying to figure out how you can get funds through a grant program, maybe it's just going for that loan instead to actually get what you need. Another question is, do you have the matching funds that are going to be required? A lot of programs like that, they require you to put some funds up with it. So do you have that available? And then also, do you have the capacity to be able to manage the grant on the back end? So it's not where, someone just writes you a check and says, here's your money, goodbye. There's usually a lot of tracking that goes into it. You have to submit requests for reimbursements, or certain grants have different metrics that they want you to be tracking during the grant period to show the impact that the grant has had on your business. So you have to provide those. So it's just thinking, do you have the administrative time on that back end to really handle that? And again, is it going to be worth it for you? So I always like to remind folks, well, in the same vein, that grants are not free money. Like I said, no one's just going to write you a check and send you along your way. They do require matching funds a lot of the time, and that can be cash that you have to actually put up in addition to what you're requesting under the grant. If it's not cash, a lot of times it's your time or donated services, products, whatever it might be. But there's usually some other commitment that goes along with the grant. Talking again about your time commitment on the front end, doing the application, and on the back end, tracking it, your time does have a value. And so it's time that you're putting in towards that. And then grants are also typically on a reimbursement base. So just making sure you have the capacity to be able to spend the money. Sorry, Eva wanted to hang out a little bit. So just making sure that you have that time commitment on the back end to, the financial capacity on the back end to be able to spend those funds so that you can get the money back from that reimbursement. Eva gets fired up about grants, apparently. Okay. So here's a couple of resources to help you guys identify grant programs. So if you've listened to that whole spiel and you're like, yeah, I can handle it, I want to do grants. Here's some places that you can go to actually find a grant program that may work for you. Again, a lot of these are going to be focused on that ag side, but I'm hoping that it can help lead you to finding grant programs that work specifically for your business. So USDA.gov and grants.gov. USDA is obviously specific to USDA grants, but grants.gov is a federal database that covers grants from all federal programs and agencies. So that's one direct resource that you can go to just search across different agencies for whatever it is that you might be looking for. That system can be a little cumbersome, but it is, all encompassing. And then the South Carolina Department of Ag puts out the state and federal resource guide. So this really outlines not just federal, but state and local grant programs that are available. It also includes loan programs. It also talks about different associations and organizations that are in the state that can help you and work with you. So overall, it's just kind of a good resource guide for what's out there. And then the South Carolina State Library has a good system to help you find grants that may work for you. They provide information on how to apply for grants. They provide little trainings on, how to develop a successful grant application. So definitely worth checking that one out. And then just in general, when you're looking for grants, we recommend a Google search. If it's something specific, you know that you need money for a specific item or a specific thing, just try Googling that, see what's out there. Sometimes you may find like private foundations that are providing funds towards that. Or if you're trying to start up a specific program, just kind of looking to see what's out there. Ask your friends and relatives, other business owners, see if they've had success with any grant programs. Look for other regional grant lists like that SCDA one that I mentioned. And then also just any industry organizations, associations, get with them, see if they are aware of any programs that are specific to that industry. And so just kind of asking around usually. I mean, we get calls all the time that says, hey, my buddy told me that I could get this grant. So people know about them. So you just kind of have to look to see what's out there. These are some of the popular programs that we work with, again, related on the ag side. The Rural Energy for America program, though, is you don't specifically have to be a farmer to apply for that one. You just have to be a rural business and a small business, a rural small business to apply. But some of these other ones we work pretty closely with, and a lot of them are through USDA Rural Development. So again, specific to rural businesses. Value Add Producer Grant is a big one that we work with for farmers who are kind of adding value to a commodity. The Veteran Farmer Fellowship is great if you are a business that is majority owned by a military veteran. I mentioned the ACRE curriculum program to help you develop your business plan, but they also provide the entrepreneurship program that can provide grant funds once you submit a business plan. And then SCDA also has some cost share programs for things like water testing or things like that. So these, again, are just some general programs there, kind of give you an idea of what we work with mostly. But overall, just kind of, if you're thinking about grant programs, make sure that you find a program that really fits your business and your needs. Don't go and try and change your whole business structure just to fit into a grant program. It should really work for you. Determine if you have that time and capacity to apply for it. Make sure you know the logical steps that you need in order to meet the requirements of that program to accomplish your goals and what you want to do under that grant. Make sure you're providing all that necessary information and documentation to them. Plan ahead and submit your application on time. And then if you don't get it, then just try again. Definitely keep all the information that you put together. And again, that business plan is really a good stepping stone to that as well, because a lot of times grant programs, loan programs, they're going to ask for that same information that you're putting in that business plan. So that gives you a head start by doing that. But if you have any questions, here's my contact information, and it will be in the slides that you're provided. I've also provided Jim Matson's information. He's the managing partner at Mats Consulting. So you can also contact him directly, and he's a wealth of knowledge about these things as well. And that's it for me.
All right, thank you, Jessica. Great presentation on grants, which we get that question a lot, as you know, as well. Let's see. Share my screen again here. And we're going to move on into funding for small business, move from grant funding to debt funding, which folks don't necessarily like to take on debt. But it may be something that's necessary. Let's see here. I think it's, oops. Go back. Okay. So one thing I will mention before I get into the debt funding is that you know, I think Jessica mentioned this a couple times in her slides. There's other ways to fund your business other than grants and, you know, debt or loans, which is, you know, through friends and family, through savings. They're crowdsourcing platforms these days where you can raise money to folks who kind of believe in your story, believe in your business, and want to help you along. So different things to explore for sure. Before you leap into getting debt. So let's get into it though. This is a Business Smart series, which is actually put out by the SBA, which it talks a little bit more about how to work with banks. And I don't know, it's on an automatic, it looks like it's on an automatic thing. So I don't know if I can talk that fast, so I might have to switch back. Yep, it keeps going back. So the first step is to talk to a bank officer and get to know the person at your bank. And I'm looking to see if there's a pause button on here too. Oh, yeah, I see a pause button. There we go. All right, there. get to know your bank, right? Wherever you bank is usually the place to start. And so you probably need to get to know who the people are at your bank, and establish those relationships. And when you need to come and borrow money, it helps a lot to know somebody there. So what you need to know about traditional lenders: lenders can kind of be categorized into several sections. You have traditional lenders and non-traditional lenders, and you have some other funders as well. But everyone has heard the jokes about the cold-hearted banker. But the truth is that lenders exist to lend. They do want to make the loans, especially loan officers. Loan officers are kind of like the frontline people. They're really salespeople. They want to lend you the money, right? They're trying to find good candidates to lend, and kind of the people who say no, or the people that kind of stop the process, or the underwriters or the credit analysts, and those folks you do not see. But in a lot of cases, the loan officer wants to lend you the money, but they're trying to figure out if you're a right fit for the underwriters and the analysts. They want to understand that it's going to make it, and you're not going to waste everybody's time. So we're going to talk a little bit about some of those underwriting standards today, and how banks make decisions, to give you a better idea of, to see if you're ready for that type of funding. So we've got some other sources other than your traditional lenders. And let's see here. That would include credit unions, micro lenders, and it still wants to go, even though I'm putting pause on it. And let's see. Credit unions, micro lenders, community-based lending programs, and wow. Let's see, and the SBA online platforms. I'm gonna try this. Hold on. There we go. This way I think I can stop it. You might have to see the outline of my screen, but at least it won't keep advancing. Let's see here. Okay. Oops. Community-based lending programs, SBA lending, online platforms, and revolving loan funds, including the USDA. So micro lenders are typically, and we're going to talk about that in the upcoming slides, but they can typically deal with smaller loans. And community-based lenders are otherwise known as sometimes CDFIs, smaller banks who are mission-driven with who they loan money to. So unlike traditional lenders, they may have underwriting standards that are a little looser and take into account maybe challenging factors for some areas, like rural areas or underserved areas. And so they want to try to make loans where traditional lenders are not making loans, right? And they're mission driven. A lot of times they're funded by bigger banks too. And then the SBA is there to also help when you can't get funding from a traditional bank. SBA has created these guarantees. And what happens is the bank may make the loan to you, but maybe there's a shortfall in one way or another. Maybe you don't have enough collateral. Maybe it's a startup business. Maybe there's another challenge with the loan. So the SBA would come in and guarantee the loan. So if you were ever defaulted on the loan, then the SBA would pay the bank. So the bank is made whole. But then it would be between you and the SBA after that. So very popular programs with the SBA. They have program called 7A 504, and they have a 7A microloan program. We'll talk a little bit more about. Online lending platforms, they're out there. Sometimes they're like brokers in a way. So they take your information, and then they broker it out to a bunch of different banks. And then a bank might come back and say, hey, I'll make you an offer on a loan. That's the way some lending platforms work. Other lending platforms may underwrite the loan themselves. In general, though, it's going to be more expensive to go to an online platform because you're talking about brokers or more risky loans. So higher interest rates is going to be a more expensive loan. But if you need access to the capital and it all makes sense with getting the loan, then they can make sense. There are RLFs out there too, revolving loan funds, a lot of times held by governments or government associated agencies, sometimes held by nonprofits. Again, they are lending to people who cannot get loans from traditional banks. And USDA does have an RLF, a couple RLF programs, one called RMAP, Rural Micro Entrepreneurship Assistance Program. And those funds are, I don't think there's a bank that has any of the RMAP funds now, but they're working on that. But they also have an IRP revolving loan fund, and there are a couple of lenders that have that. So USDA is working to help fund rural America, and honestly, USDA is the #1 funder of rural America. So what is a microloan? And you might have seen the topic of this session and curious about microloans and micro entrepreneurship. Generally speaking, a micro business is under 5 employees, so a very small business. 1 employee is a independent sole proprietorship. A micro loan is also capped usually at $50,000. So loans under $50,000. So what are the advantages of micro loans? Sometimes they have flexible credit requirements. You can get into it, without all the underwriting. Some of these micro loans just look at your credit score and don't worry about collateral, don't worry about some of the other aspects that bigger loans get into. Pay more attention to the character of the business owners. Work more closely with their borrowers, may provide technical help and advice. A lot of these micro lending programs have technical assistance that go along with it. Jessica mentioned a lot of great resources, including the SBDC, but sometimes you can get, some of these lenders to help give you advice as well, and understand the conditions of the local community and how they may affect businesses operating there, especially in rural communities, because businesses, as I expressed earlier, operate under different conditions and a lot differently than, in other areas. So microloans are, a lot of folks just don't need that much money either. And first of all, a lot of people, you don't want to necessarily take on a lot of debt because, debt you have to repay and with interest. And, when you're taking on that much debt, in some cases it can become a burden. So the microloan is nice in that maybe you only need $20,000 to start your company. I talked to a gentleman yesterday with a landscaping company. He's interested in getting some funds to grow his landscaping company, and he only needs $20,000. And he should be able to accomplish all the goals he needs in regards to growing his company with that, right? He doesn't need $150,000. Although he may be able to get a $150,000 loan, he doesn't really need it. So those microloans come in, handy in that case. One thing about microloans is a lot of traditional lenders don't really do microloans on the commercial side, because for a banker or a lender, it takes the same amount of effort to make a $50,000 loan as it does to make a $250,000 loan. And of course, the bank is going to make a lot more money on a $250,000 loan than they would on a $50,000 loan. So they would prefer to focus on bigger, numbers. And a lot of lenders will say, hey, we can't work with any project under $100,000. They have a threshold. They just don't want to deal with the small loans. Even some of the RLFs that I mentioned there before, they don't want to work with the small loans. Commercially speaking, there's other ways to get micro funding through a traditional route, maybe just, a home equity line of credit, a HELOC. you just need 30,000. You can get it out of your home's equity. And credit cards and things like that. They're higher interest, more expensive money, but usually are credit driven, not collateral driven. And it's just another way to access under $50,000 fairly easily. Average size loans, SBA's microloan program, the average size is 13,000. So it's pretty small, right? But it might just be, if you're just a sole proprietor, one person business might be all you need to get what you need for working capital. Loan requirements vary from lender to lender, of course. Microlenders also provide help to borrowers with business basics and any problems that come up after the loan is made. So non-SBA microloan programs also may be available in your community. So I've mentioned a few here, types, but specifically the organizations that do microloans that I know of are the Climb Fund, which is out of Charleston, and they do SBA microloans, and Community Works, which is out of Greenville. Both the Climb Fund and Community Works service the whole state. They both do microloans. There may be some other ones out there that I'm missing. I know there's some smaller RLFs that are like regionalized, like down in Barnwell and Allendale, Bamberg area. It's called the Promise Zone through there, and they have an RLF microloan product. So you just really need to check with your local folks. You can call a local SBDC too, and we should be able to help you with that. So what matters to most lenders? No matter who you ask to lend you money, the lender will be looking for a business owner who knows the business, has the ability to run it well, and willing to work hard to make it succeed, especially who knows the business. They want somebody with experience, right? Somebody who knows the industry. If you want to open a business or get a loan on something that you've never done before in your life, that throws up a red flag to a lender. You may have the management experience in running business, which helps. But if you have no maybe technical experience around it, it doesn't necessarily rule out your ability to get a loan, but it helps if you know the business. A business that is financially sound, or if it's brand new, appears to have the ability to make enough money to pay its bills. So they really want to know about that. Collateral to cover at least part of the lending risk, and investment from the business owner, or skin in the game is what a lot of people refer to as an investment from the business owner, because many of the times they don't want to give you the whole amount. They want to say, hey, we'll put up something, you put up something. So, both have skin in the game and something to lose, so to speak. So, in short, lenders are looking for an applicant that thoroughly addresses what's commonly known as 5 C's of credit, which is what we're going to go through today. So the 5 C's are character, capacity, cash flow, collateral, capital contribution, and condition. So what is character? This is your personal reputation and your general impression you make to a lender, your integrity, right? What a lender considers who you are, whether you live in the neighborhood for a long time, whether you have accounts with the bank. So I think I mentioned that your own bank is a good place to start for a loan, because you have that relationship there, and you can they can verify your character. How you pay your bills. So credit is a part of character, right? And credit makes up a large portion of what a lender considers in underwriting. Generally, about 35% of the decision of your credit score comes from how you pay your bills. So that's considerable. So bad credit usually means the loan will be turned down. And if you're looking for what's that threshold, what credit score should I have? A good score that most lenders throw out there is 680. So if you have at least a 680, they're looking for that. that doesn't mean that, it rules out funding for you. Just if you're 650, if you're 620, they may still be able to make the loan. It's just, you may have to look at the deal in a different way. Some people will not make the loan at all if you don't have at least a 680. Other people, like I mentioned, some of these community lenders, CDFIs and revolving loan funds will take in consideration credit history. And hey, maybe you went through a rough patch. Your spouse lost their job, but they've got another job now, but you went through a patch where, you weren't able to pay things on time, brought your score down. So looking at your credit history or your credit report, you can actually explain what happened in certain periods in your life that caused your score to go down. So a lot of banks will say, hey, well, we don't just look at the credit score. It's a good indicator, but we'll look at your report. Also, what's your management experience in running a business? That's part of character. I've had clients who I've had some really young clients in their early 20s who wanted to buy a business, and they've been doing it since they were like 15 years old. They technically know how to, this was a tire shop. They know how to do all the mechanical, things, but they have no business experience. So that was a weak point on their character that we were able to overcome through different methods, but it can just weaken, I guess, in some instances. So credit report is important. The FICO score, everybody can get a free one. If you go to annualcreditreport.com, pull it down, check it out, is at least annually to see if there's anything wrong there. And then you can go through the process of getting corrected if it is. I mentioned that 35% of your payment history is calculated in that score. So if you don't make your payments on time, it's going to negatively impact your credit score. Also, the amounts owed. So if you have high balances on, I guess, your credit capacity, so if you have a credit card, line of credit, and let's say they gave you a $10,000 line, and you maxed out your card or you maxed out your line, maybe you have 9,500 of 10,000, right? So that's going to negatively impact you because you have more amounts owed, higher percentages owned on the credit available. But they would look at overall, how much do you owe, right? And how much capacity do you have outside of that? Also, new credit, you hear about credit checks and things like that impacting your credit score, which it can. Length of credit history. I had someone ask me today, I'm young, I'm 19. How would my credit score be impacted? Well, the longer you have credit history, it's usually more positively impacted versus folks who are just starting out, in the types of credit in use. So very important indicator to lenders as to whether they want to move forward with loans. It's not always, a no-go for getting money, but in some cases it is for some lenders. Others, it's just, okay, let's talk a little bit more about the other aspects of the loan. And if your credit score is low, there's different methods you can use to go out and try to fix this. I would definitely do it. If something doesn't look quite right to you, you can call the credit agencies. There are services, online services and individual services that you can pay to help you repair your credit as well. So we got, character and credit. The second thing that funders look at is capacity or cash flow. Capacity is whether your business makes enough money to pay all its bills, including a new loan. So this is basically, do you have the income in your business or your family to cover the debt service, right? And you determine that through the cash flow of the business. If you have an existing business, you can look at your tax returns or your profit and loss statements. Are you making a profit, right? You're looking at your income, you're looking at your expenses. subtract your expenses from your income, and you get a profit or loss. So if you make a profit, that's your cash flow. And then a bank can determine, well, do you have enough profit or cash flow to support the payment of a loan? If you do, then great. And there's actually a ratio or formula they use to determine that. If you don't, well, let's look at it a little deeper. Sometimes you can do add backs, take things out of your profit and loss statement to, like, if you already had a loan and you're refinancing that loan, that can be taken out and things like that. But the main thing is there the cash flow. If this is a startup, you have no cash flow in the business. So they then want to determine, well, what other means of income do you have outside of the business that are going to support the payment of this debt service? So if you have a spouse or you have a family member who's willing to either come into the business with you or support the loan or sign on the loan with you, and they have income that can, support the payment, you might have to do that. But you have to look at it holistically and just determine whether there's enough cash that's going to come into the business to support it. Because they don't want to lend you money if you're not able to pay it, for both parties, right? Because it's a lose-lose situation in that case. They want to make sure that, hey, we're both strong positioned to be able to make these payments and whatnot. So, and I just mentioned, some of these things here. If you're existing, they'll look at historic cash flow. If you're new, they're going to look at projections, which are made up numbers essentially. Educated guesses, because it actually has a basis for what you're going to do. But they will also look at outside income as well to strengthen the loan request. So we know that you need income to support the payment. We know that you need decent credit that shows, hey, I've been paying people back on a regular basis. The third part is collateral or guarantees. Collateral is something of value, a tangible asset that you own or will buy with money from the loan and that you can pledge to secure the loan. In some cases, you're not buying the collateral with the loan, but you already own collateral. Like maybe you own a home and you have equity, or you own other real estate and you have equity in that property, and you can use those properties as collateral. In some cases, you're actually buying the collateral and like a vehicle or real estate or big equipment, and you can use that as collateral. So they want to collateralize this, which means if everything goes south, business fails, you can't make the payments, well, the bank needs an avenue for getting their investment back. And that would be to, reclaim that collateral and sell it and liquidate it and pay off what you own the loan. So that would be repossession and those type things. So they try to collateralize these. Sometimes people don't have the collateral available for the loan. So that's where guarantees come in, and that's where the SBA comes in generally, with SBA guaranteed microloans and loans in general. So if you have a shortfall in collateral, the SBA is like, well, we'll guarantee it. So if you meet all the requirements of the SBA, of course, and all the underwriting requirements of all the other underwriting requirements of the lender, and then the SBA comes in. So if you fail to pay the loan to the bank, the SBA makes the bank whole, and then it's just between you and the SBA after that. That's basically a guarantee. The SBA does it, but so does the USDA. The USDA has a guarantee as well. These are federal guarantees. So collateral, very important. You can get uncollateralized loans, like I mentioned, especially microloans. Some even SBA loans. Well, SBA and some other uncollateralized loans are just credit driven usually. So you need at least a 680 probably, or maybe even a 700. And then, usually a little bit higher interest rates because it's riskier, no collateral. Maybe not too much more though, but definitely a couple points, 2-3 points higher. So this could be more expensive. So the fourth is capital contribution. Business capital equals business net worth, what your business owns minus what your business owes. So the assets minus the liability equals equity in your business, right? And that's your net worth. This includes the money that you've invested in the business and what you've committed towards the business, and also commit towards this project. A lender expects you to have contributed something to the business. In other words, skin in the game, equity injection. Especially with traditional lenders, lack of equity usually means the loan will be turned down. Like I said, if you were buying a building, they may lend you 70%. If the building is $100,000, they may lend you $70,000 or 70%. You would need to bring $30,000 of capital to the table. But you know, every bank's different. Some will lend 80%, some will lend 90%, depending on the collateral or what you're buying. If it appraises at a certain amount, they might even lend up to 100%. So there's a lot of different situations, but all of them like to see that you put some equity in, or you have equity in the business to contribute towards the project, towards the loan, and whatnot. So very important. Capital contribution. And lastly is condition. Loan conditions that a lender considers when approving your loan is, well, how much money do you want? What is the loan amount? You know, in the case of a micro loan, we're not, in the grand scheme of things, talking about a lot of money in their eyes. They're usually dealing in hundreds of millions of dollars. So anything under 50,000 is not a huge loan, but it does impact maybe the interest rate and some other considerations. What is the interest rate, right? Again, what's the interest rate? What you will use the loan for. For example, we use to buy fixed assets, which is like real estate, equipment, inventory, or will you use it for working capital? Working capital is essentially day-to-day bills that you might pay, like for utilities, you know, supplies, some other stuff like that. Labor. So how are you using it, and does it make sense, right? Every bank needs to know how you're using the funds. In some cases, they will make you get quotes on all the stuff you plan to buy on the loan. I don't think you would do that on a microloan, but some other stuff, bigger loans, they might make you do that. How well are people doing in your community, and how well your business industry is doing? So this might impact rural business loans because they're looking at the condition of the area. And there's something in lending which is illegal, called redlining. Redlining kind of historically came from lenders who took a map and draw a red line around a certain area, and they say, I'm not lending, we're not lending in that area, right? For, you know, maybe it's a low income area. You know, maybe there's a lot of reasons that they do not want to lend in that area. You know, they can't redline, that's illegal. But when you're looking at rural communities, sometimes it is redlined in a way because of the challenges that face rural small businesses. And, you know, the lack of lenders that are in those markets. You see the lenders, they're centered around urban areas. Sometimes you get a few out in the rural areas. Some ag banks, credit unions sometimes, and smaller banks, right? You don't see like too many Bank of Americas or Wells Fargo in a rural area. So in a way, they want to know, well, I mean, how's the economy in the area? How's our investment going to be in this area? How's it going to do, right? But that also goes to the point of the business plan, you know, is convincing the lender, hey, this is how it's going to be successful in a rural area. We did the business plan, you know, this is what we're doing, this is how we're going to market it, and this is how we're going to make money. So very important. When you go to get a loan, prepare to ask for the loan. Have your business plan together. Be able to tell your elevator pitch, your story about who you are and what you plan to do. Understand all those things that were just discussed. Know your credit score. Know if you have capital available. Know how you're going to cover the payment. I mean, if you have all this and prepared to answer these questions, the banker will be very impressed. You know, if there's an issue here or there, you might already bring that up and say, hey, there's some solutions that I thought about. Are these workable? Right? So go in prepared, be honest about everything. People are bad about not telling lenders, or I should say loan officers, the truth initially, or not lying, but just not telling the whole story. And then later on it comes out because, you know, you have to dig further. You have to get documents, you have to find out more information about things, and then things are revealed later. And you're like, well, you should have told me that in the beginning. So it's good to be honest up front and just tell them everything. You know, they're going to find out. Because before they give you $50,000, they want to know a lot about what's going on. So anyway, be honest. It's the best approach. Again, the business plan, like Jessica went over, have that, also have a resume that you can offer as well. Know how much money you need going in, preferably, because they'll also ask you that on the initial visit. So I want to get a loan to start my business or to grow my business. Well, what do you want to do might be the next question. Then following that will be, well, how much do you need? So it'd be good to know that, and you have to figure that out, you know, by considering what you're going to use the money on. Are you going to buy real estate with it, equipment, whatnot? You went out and got estimates, you calculated, you know, how much you thought rent was going to be or mortgage or whatnot, and you've determined, hey, I think I need, you know, $50,000 to get this off the ground. You know, this is what I'm going to spend it on. Should be good. Some of it is working capital, so forth and so on. Usually with the working capital, they like to see like 6 months of, you know, savings for working capital in a startup. So if you're based on your projections, you're going to spend this much per month. You know, let's say you're going to spend 10,000 or 5,000 per month on expenses in your projections. That's 30,000 of it should technically be for working capital. But, you know, you might also have savings too. You can say, well, I'm going to use 30,000 I have in a savings account for the working capital, and that might be okay, but something to consider. So there's term loans or lines of credit. A term loan is basically a fixed payment over a period of time that you pay back, but you get all the money up front. There's drawbacks and benefits to that. One drawback might be you're paying interest on all that money, right? But it's also convenient. You know exactly how much you have to pay, and you might need all of it to begin with. There's lines of credit too, which is basically kind of like a credit card for the business in a way. They might give you, say, a $50,000 line of credit. You don't need the money right now, but when you need it, you draw down the amount of money that you need. Then they start charging you interest on the money, and then you can repay it, and you can draw it down again. You can repay it. This is good for seasonal businesses, buying inventory, you know, at certain times of the year. You buy it with the credit line, you pay it down, then come next year, you buy it, or the summer, you pay it down, then you buy again in the fall, you know. So it's something, you know, that it's always there. It's a good tool for businesses for sure. So how will you pay the money back? I think we talked a lot about that. When does it mature? That's important. So they have things called balloon loans, where they do 3 years, balloon, like maybe 15 years. Your payments are small, but you got to pay the whole thing back in 3 years. So either you have to refinance it or pay it back. So you need to consider those things, you know, when they come up. What's your collateral? What are you going to put up? What's your company's fiscal condition? Can it pay the bills? Are you paying your bills on time? Do you ever write checks for more than you have in your account? That's called floating checks. It's not a good habit to have. But yeah, so are you in the financial conditions to do this? And again, how much should I ask for? How much do you really need? Most people underestimate this, especially in startups. But you know, it's something that you need to get a hold of based on really looking at, you know, where the money will be spent. Seek technical assistance resources in your community. Getting started with a business or getting a loan. If you can get advice from multiple parties, it could help just give you perspective on the whole thing. And that is what the SBDC is here for, is to help with that. We get those calls every day, and you know, we're happy to assist and give you anything from just a sounding board, try to verify what you're saying and help you out, to helping you actually with the package, submitting it, you know, connecting you to the resources and loan officers and the whole 9 yards. So that is the presentation on microloans and rural small businesses. A lot of good information, I hope. I hope you enjoyed it. If you have any questions, we'll take those now.
So
Okay.
please type your questions into the chat box if you would. Jim, we had someone that needed to leave early due to a work call. So he would like for you to reach out to him. It was Ian Thomason, so I'll be sending you his information.
Okay. Sounds good. Any other questions?
So this is from Matt Bellius, I believe is the correct pronunciation. And the question is, does the county you are working in impact loans?
I think generally speaking, probably no. Again, it goes to that there's under one of the 5 C's is kind of consideration of the loan terms and the business. And sometimes businesses in rural areas may not have the access to capital that other areas have. In that case, it's an impact, right? But you know, there's programs that are also in rural areas that aren't in urban areas, like USDA programs, USDA microloans and some grants, and local or regional revolving loan funds, which serve the area because other funders are not serving it. So yeah, I think there's an impact, you know, depending on the county that you're in. You know, some cities have a lot of different loan products that you could never find in a rural area. So if you're in like Richland County, you know, they've got stuff that you couldn't find in Bamberg County or Allendale County. So yeah, it definitely does matter which county you're in.
So the next question is, how many loans do you see approved? Well, and that's, of course, once you get them completely lender
Right.
ready, where they have a good credit score, good collateral, you know, a good business plan and all of those things. So it's, you have to meet all of that criteria.
Yep.
And find a lender that's interested. So there's a lot of variables, I would think, in saying how many loans do you see approved?
Well, I think a rule of thumb from a loan officer's perspective, and Paul could definitely chime in on this, but a loan officer is like a salesman. He's the guy who goes out and he's trying to get loans for the banks, and he might have to talk to 100 people to get maybe 5 loans or something like that, that are bankable, that, you know, can be lent. But, you know, once it gets in, and once a loan officer gets you through the process and you do everything that you say, that's the thing about the loan officers, they need all these documents and they need someone to work with. So people start falling off. a lot of times after they have to do more work. But if you get in working with a loan officer, you start like advancing the package, getting them all the information that he needs, business plan, financials, all this other stuff. And he gets it to a certain point, your odds go up drastically. And then, you know, he's kind of like a gatekeeper. Like usually they have either a manager or boss that they can go to that can approve it, or it goes to a committee or board that approves it. Or it might have to go up a bunch of levels depending on the bank. But if he presents it to one of those folks, then it's probably got a good chance of getting funded. What do you think, Paul?
Yeah, I was going to say all of that is true. One of the pieces of advice I would give on that front is you're right about one thing. Once you get to the stage of the application package, what's generally going to happen is whether it's a bank or a CDFI like Climb Fund, they'll give you a 2-page list of documents that they need. Take a few deep breaths and then come see one of us and we can help you through that. But that's absolutely true. Yes.
Okay, here's the next question. I am launching into the tech industry. Are there any specific loans aimed towards tech?
I think tech is a kind of a trending industry. I think in general, banks and lenders have an appetite for different industries, different appetites for different industries. Some will be like, we don't want to lend in the hospitality industry. We want to lend in these other industries, and they may have identified the industry they want to lend in. Some may be like tech focused. They're like, oh, we want to do more of these loans because like high growth, high returns, they'll need money because they'll be growing, you know, especially if it's a good, you know, good idea. And it's a solid business plan, a solid business. So I would think that that a lot of banks would probably be interested in the tech industry. It just, again, it depends on the individual proposal too, you know, just not any tech. They'd have to look at it and say, oh, this is a great idea. Or, you know, you make a good case. And you have all the other elements as well.
So the next question, does a packager assist with the USDA microloan? If not, can the SBDC assist with the application process?
Yes. I've done a couple of USDA, not microloan products, but I've done the rural development business and industry B&I loan for USDA, help package that. And there's not a lot of folks doing the USDA microloans here in South Carolina. I think maybe one lender's doing it. But there's some more coming on. But honestly, it's kind of the same. Like the microloan, USDA microloan is the same underwriting process as like SBA and all the other ones. A couple more forms to fill out. But yeah, we'd be happy to help with that.
So the next question, I'm not sure we're going to have an answer to this one. We don't have a government contracting specialist on. I was informed that there were funds available to help scale your company if you provide goods and services to the federal government. Are there programs and/or funds that help you scale your government contracting company?
None that I'm aware of outside of the normal traditional routes, like any other business that's seeking funding, whether it's debt or grant funding or investment, equity funding. You know, I can't think of anything off the top of my head that is just specifically for government contracting, funding wise. It helps now if you kind of have a contract in place, and then you can take the contract to a funder and be like, hey, I got a, you know, this $1 million contract with the government. Will you lend me the money? They'd be like, oh, okay.
And well, and many times they'll do a line of credit against
Right.
that contract, will they not?
Yeah. Yeah. Because it's kind of a guarantee of payment in a way. Not a total guarantee, but you still have to perform on the contract, but it helps. It would help the situation for sure.
All righty. Is there a compiled list of loan products?
Actually, yeah, I have a lending guide that I can send out, which is, it's been updated in 2022 to include all of the non-traditional lenders that I know about in federal programs. It doesn't include every like traditional lender because there's so many banks out there. You know, so we can send that out with materials as well. And I don't know, do y'all have a list, Carolyn and Charleston?
Not a lending guide. No, sir.
Okay.
Jim, if I could add something onto that real quick. One of the suggestions that I would make based on that is that there is all kinds of stuff out there, especially if you do a Google search. And so I would just recommend, if you're not sure about something, talk to one of us about it to make sure that it's the best option for you.
Yep. Good advice. Yeah, I mean, some of these loans come with a lot of fees, and
Right.
they can be expensive, and it
Short-term,
might
high
be-
interest, and lots of fees.
Yeah.
The next question is, would an angel investor require the same criteria? So I know that they do want to see a business plan and financials and all of those things. Would that be correct?
Yeah, we don't have many angel investors in South Carolina, to my knowledge. An angel investor basically invests. Well, sometimes they don't take equity in your business. It's a gift. It's kind of like a grant, is my understanding. From an angel investor, they're just trying to. It's mission driven. They like what you're doing. They want to help you along. There might be other agreements between an angel investor that that it's in writing. But like VCs are a different type of investor, which is an equity investor usually. But angels, I think there are a couple angel investor places in South Carolina, maybe one that I know of.
There are a few around, yeah. Yeah, there are a few around, and a lot of times what they're going to want is what's called a pitch deck, which is sort of like a business plan, but geared a little bit differently for what they're looking for. But we have a handful of templates for those as well. So if you do think you want to go that route, we can assist you there also.
I think there's one in Charleston and maybe one in Augusta, which Augusta.
There is one in Charleston.
Yeah. Outside of that, I haven't come across them. But I mean, the thing about angel investors, they would have a pool of people who, want to invest towards certain things. But, that's like a grant. I mean, it's like limited amount of money, right? And when it's gone, it's gone. And then they have to invest again. So it's kind of like a grant. It's going to be out there for a minute, but then it'll be gone. So it'll be very competitive too.
Yeah, it's very competitive. And as you said, one of the things you want to be careful of is it a situation where they're going to want to take an equity stake in your business, which would basically mean that they would take an ownership stake in your business. A lot of times angel investors won't. It is very common with VC investors. A lot of times angel investors won't, but sometimes they will. So you're going to, again, want to make sure that you know what all the terms are. I worked with a client recently who had gotten so many different sources of funding from so many places that he was no longer the majority owner of his own company because he'd given away so much of the equity to different lenders. So it is something that you want to watch out for.
So we had someone ask, and I'm sorry, I replied directly to them versus everyone. And it was about, are the loans still available? And the answer to that is they are no longer available, as that was COVID relief funds.
Right.
So, all of the funding, even those of us who are providing COVID services, our funding ended and we had to report all of our funding, how it was spent at September 30, 2022. So I'm not aware of anything else out there coming to in the future for COVID relief. And here's another question. How do you find or identify community-based lending programs?
I will, when I send that lending guide out, I'll have community-based lending programs in there. But, start with your local chamber of commerce, your economic development in your county or area, and, ask them about the lenders in the area. Of course, SBDC, if whoever your closest SBDC consultant is, we have 21 locations across South Carolina. So any SBDC consultant is going to know the market. Like I would know most of the lenders, within the Midlands regions, but I'm not going to know all the lenders in the upstate. But you can contact, SBDCs in Clemson, in the Greenville offices and whatnot, and they'll know the markets better up there. So contact your SBDC, your chambers, economic development to get connected in with community-based lenders.
All righty. Were there any other questions today? Well, if not, we will end this shortly. All of those that we have confirmed their attendance will receive a post-event survey, and that will be sent to you before 5 o'clock this afternoon. And if you respond to that post-event survey, we plan on following up with you in 5 to 7 working days and providing the slide decks from both of the presenters, a link to the recording from today's event, as well as the guide that Jim shared. So if there aren't any other questions, we want to thank you for your interest and your attendance this afternoon, and we look forward to meeting you in our offices. Thank you very much and have a great afternoon.